Good evening, everyone. Welcome to another live strategy session with Jeff Tompkins. Richard couldn't join us this evening, so I'm your host, Craig Ward, and I'll be here assisting with questions in the chat. We're excited to have you here tonight, and I'm sure you're excited to hear what information and symbols that Jeff has to share with us. If this is your first time with us, you'll notice your microphone is muted. That is so we can all hear myself and Jeff speak. If you do have any questions, you'll find a Q&A in a chat box at the bottom of your screen. Please feel free to enter your questions there, and we'll get to those as the session continues. If you do have any questions regarding any of your subscriptions or account, please email us at support@Altos Trading, and we will get to those during business hours tomorrow. If you do have to hop off tonight, don't worry, this is recorded, and a replay will be available in the members area and YouTube sometime tomorrow. All right, Jeff, you there?
I am here. Thanks, Craig. No Richard tonight.
No Richard. Took the night off. Lazy.
Well, welcome everybody. So Craig and I are here with you guys, and pleasure to have you on. Looks like we still have a lot of people coming into the room. Hey, Siva. So as people are joining here, we'll go through our disclaimer. Altos Trading and the Trade Trend and Zillion software is intended to be used as an information service for subscribers. It does include opinions as to buying, selling, and holding various stocks and other securities. However, the publishers of Altos Trading's Trade Trend and Zillion software are not brokers or investment advisors, and we do not provide investment advice or recommendations directed to any particular subscriber or in view of the particular circumstances of any particular person. Altos Trading, including its owners, does not accept responsibility for any decisions made by subscribers using our software, and subscribers to the Trade Trend and Zillion software or any other person who buys, sells, or holds securities should do so with caution and consult with a broker or investment advisor before doing so. So we are going to be going over some scanning tonight. We've got a couple exciting announcements to make prior to that. But we're gonna look for opportunities in the current market environment, see what's out there, and make this more of a ticker roundtable session. So really excited to make this an interactive evening with you guys tonight, and hopefully find some really good opportunities, because we are in the midst of earnings seasons. So there's a lot of volatility. Yesterday and today, not much directional movement, but I think as the dust kind of settles with earnings season, that it could give us some more clarity about direction. But as we get into that in the market overview, we're going to look at kind of where the sentiment lies, whether it's bullish or bearish, and where the likely future direction is, as we kind of get through the uncertainty of earnings season. And this is like I think the first earnings season that we have. Yeah, it's the first earnings season we've encountered since the collapse of Silicon Valley Bank. So that obviously created a lot of market uncertainty, but it never did really progress into the feared widespread collapse of the banking system, which I'm not surprised about, but there was a fear there amongst many market participants, and that of course has not occurred. The banking system remains resilient and robust, and now that fear is kind of exiting the market, it's opening the path, I think, to greater bullish long opportunities for traders and investors. So that's what we're going to kind of talk about in the context of our market overview. And then, of course, where those key levels lie in relation to today's current closing prices, and what we expect in terms of directional movement and support and resistance in the near medium term. We'll look at our 36-month moving average, which is also injecting kind of more bullish sentiment into the weeks and months ahead, in terms of where we ended up at the end of March. And so, as I mentioned, we're going to focus tonight on scanning for buy and sell signals, looking for opportunity. And we're going to tie that into our ticker roundtable. So not only are we going to look at, I want to give you guys a glimpse into what I'm looking at and what looks appealing to me, but also what you guys are interested in looking at. So we'll tie that into ticker roundtable. So exciting announcement. We've launched our new website. In fact, I'm going to go ahead and pull that up. I didn't have it up and ready, but before we get into our market overview, let's go ahead and get over to our browser. So we launched our new Altos Trading website, which we designed to make more streamlined, easier to navigate, and user-friendly, so that you can. And I'm going to get into this the sale that we're running currently too. So if you guys want to take advantage of that, you can. So we've divided it up into our core offerings, which of course involve trading education, which you can find under our course. And by the way, website is altostrading.com. Under our course tab, our trade alert services, which we're continuing to launch additional trade alert services. And that's where you'll find those indicators. We're also developing new indicators. Most recently, we developed the price action pivot indicator, which is currently available. We are in the process of developing a course around the indicator to help you guys, interpret the signals and use the indicator successfully in the markets. So that's coming soon, and that will ultimately be found under courses. We also, of course, offer coaching services, 3 different tiers of coaching, which can be found under the coaching tab, as well as review from our current members. If you are a current member, it also includes the login portal. So if you go to our login portal, if you're a Trade Alert member or a Trade Trend member, Fast Money member, or enrolled in any of our courses or coaching programs, you can access the login portals there. So feel free to peruse the site. We are offering a 25% site-wide discount this week. So you're able to, you'll see that when it pops up. There's a coupon code there. Purchase any of our products or services this week for 25% off. So it's a good opportunity to get a discount. And even if it's a subscription to like one of our Trade Alert services, you're able to lock that 25% discount off for the life of your subscription. So it's a really great opportunity if you're not using one of our products or services and are interested in one, to get a really great discount. It can't be combined with any other offers or used for current subscriptions. So it would have to be, it only applies to new subscriptions or new products. But I'll run through the homepage real quick, and then we'll get into our market overview. So it's designed so that you can get easy access to our education. So you'll find that it has our weekly live sessions. And if you're not on our list to be notified of those, probably most of you are since you're here, you can go ahead and enter your email so you make sure you get notified of each of our weekly live sessions. We also publish a weekly newsletter every Wednesday, our Trader's Edge newsletter. If you're not receiving that, you can also go ahead and enter your email to receive that weekly. It's a free newsletter that provides a lot of market insight, analysis, strategies, and various things that we're doing here at Altos Trading. There's also a link to Altos Capital, which is my hedge fund. If you guys prefer to have your funds managed for you and traded for you, you can find more information here about that on the homepage as well, and contact us to express your interest in that. We have our VIP package, which a lot of people have taken advantage of this week with the 25% discount. You can actually become a VIP member of Altos, and you can do that at a 25% discount, and you get every product and service that we currently offer, as well as a significant discount off of any future products and services that we offer. There's also a lot of other cool things that come into along with that, like annual in-face meetings, in-person meetings, I should say, face-to-face meetings, in-person meetings with me and our team. So a lot of really cool stuff, and you can find out more about that in our VIP Inner Circle. We're also going to be publishing recent articles, which you can find down below that, and also read testimonials from a lot of our other members. And so lots to explore here, but wanted to make you guys aware that we are running the 25% discount. Craig, when does the discount offer expire?
I believe Richard had it set for expiration today, but we've had a lot of inquiries and people still looking through stuff, so we may extend it if the demand is still there.
Okay. Yeah. So I'll talk to Richard after our session tonight, but we'll at least extend that through tomorrow, since I wanted to make sure you guys were aware of it on our session tonight and give you some time to look through things and decide if there's anything you guys are interested in. So we'll at least run that through tomorrow if you guys are interested in checking that out. Okay, so one other quick announcement before we get into our market overview. We are going to be attending the International Traders Expo and Money Show next week in Las Vegas. So if you guys are planning on attending that, or maybe you haven't planned on it and on short notice want to attend, it is very short notice, I realize, but it is next Monday through Wednesday. So I believe that's, what is it, the 24th? Let's see, my calendar up here, 24th through 26th. So next Monday through Wednesday. We'll have a booth in the exhibit hall, and I'll also be giving two educational presentations on Monday and Tuesday. So if you guys are already planning on attending or are interested in doing so, love to see you come by the booth, meet you in person, and have you attend our educational talks. It is there are free packages to attend the Traders Expo and Money shows. You can find that on their website. But if you guys are going to be there, shoot us an email, let us know. Be great to keep an eye out for you and hopefully meet you guys in person. All right, so those were the two things I wanted to cover before we get into our market overview for today. Let me refresh our dashboard and take a look at our key levels on the major indices. Okay, so we're in the midst of earnings season, right? We're going to take a look at the earnings calendar. There's a lot of corporate earnings coming out this week, and that's kind of really the catalyst that's driving the market. But so far, it hasn't really moved the market much. We've kind of just been in a bit of a volatile sideways market since the quarterly earnings season kicked off, and after we had this run up in the S&P from mid-March, and we are back up at a significant resistance level. So we're also above a key support level. And so let me first annotate those. The big one, which is actually quite a way on the S&P, quite a bit below current levels, that is more of a medium to long-term level to watch, is 4,000, millennial mark that, as long as we can stay above, is going to add more weight to the conviction of an end to at least the stock market, the equity market bearishness. And obviously we're out of technical bear market territory, but the bearishness that we've heavily experienced in 2022, as long as we can stay above that, because of course we dipped below 4,000 this year, I think is very very convincing in terms of more medium to long term indication of resumption of the the broader uptrend that we tend to see in the major indices. But of course, when you get kind of drill down into the short to medium term, there's a lot of potential for more whipsaws and up and down movement. So this is, again, 4,000, really a medium to longer term level we want to make sure that we're aware of. We're, again, well above it now in the S&P, 4154.87 on the close today. What I want to make sure that we're watching this week are the key millennial marks. So 4,100. Actually, I want to zoom out a bit here because I don't think we're getting a big enough picture of where we are here. That's better. All right, so again, 4,000 is our millennial mark, and then keep a close eye on 4,100 as support. So 4,100, we've got a lot of significant reversals, right? Directional reversals off this 4,100 level, particularly when we come up from the downside into 4,100, we tend to rotate lower. So something different has happened here because we broke 4,100 in March. And this is what we tend to see when a support level transitions from a prior resistance level. So here, we were resistance, okay? Here, we broke resistance, retested, and rotated off. So that gives the level more strength. Keep in mind, that also happened in January, February. Right? We broke, retested, and then ultimately came back down. So the reason to point that out is if we see something similar to January and February of this year, it's a very strong indicator of retest. Well, first of all, continuation of rotation of the downside and retest of key support levels like 4,000. In the case of January, February, it took us down into the 3,800 level. So really watch 4,100. If this holds again, right, and we can rotate higher, with the caveat, we get through resistance, which we're going to look at now. We're just looking at support. That is what's going to open the door to much higher prices in the market. So 4,200 is our key resistance. Okay, it's a millennial mark. It's the level we encountered this year. Oops, not the one I wanted. That we ultimately reversed to the downside from. All right, so expect to see if we do get up to 4,200, and it's going to take some, positive earnings, or at least neutral earnings that aren't negative enough to, cause a sell-off to get up to 4,200 and potentially break through it. But if that happens, it's going to open the gateways to higher market prices. In my biases, that's the likely outcome. But I'm still waiting to see how price reacts around these key levels. So the really important ones to watch are, and remember guys, the S&P, even if you're not trading an S&P stock or the S&P ETF, the SPY, has a extremely wide-reaching impact on the markets. A very high percentage, like 75% or maybe even more of equities follow to some degree or somewhat correlated to the S&P. So this is why it's so important and why we spend a lot of time focusing on this and why it's so important. So the levels to watch as we're as new earnings are coming, quarterly earnings are coming out this week, are 4,100 support and 4,200 resistance. So it's really kind of a 100 point wide range here that's going to probably indicate where the markets will head after earnings season is over. Okay. So let's focus on those for now. When we meet next Tuesday, we'll probably know if we're looking at encountering our 43.25 quarter century mark or our 4,000 millennial mark as support, 43.25 resistance. But for now, let's just focus on 4,100 support, 4,200 resistance on the S&P. So those are the ones we really want to watch. As long as we stay in between 4,100 and 4,200, we're likely going to continue to see what we saw yesterday and today is not much directional movement, more volatility, more intraday reversals where like yesterday we open, trade lower, we open about midway between the high-low range, trade lower, close higher. Today it was open higher, trade lower, still come up, close midway in the range. So again, not a lot of directional movement. Expect that until we get out of the 4,100 to 4,200 zone. All right, let's hop over to the monthly chart of the S&P real quick, because this is significant on, again, more of a medium to longer term basis. So looking at the monthly chart of the SPX, each candle is a month worth of price actions, and this is something we've covered over and over again in our weekly sessions. The 36-month moving average, which historically serves a very strong level of support for the major indices like the S&P, and we had a very bullish reversal in March. Zoom in here a bit off this moving average, which currently closely coincides with the 4,000 millennial marks. Remember, that's why I emphasize this as a very key support level. Not only is it a static horizontal support level, it coincides with this dynamic 36-period moving average on the monthly chart. So again, we're watching to see if we can, and so far the market's telling us it wants to move higher off this level. You can see all of these months, even in the midst of the bear market last year, we're finding support here, and it wants to move off of it. But so far, since the bear market, initiated, it's been a very strong level of resistance at 4,200. It's been very difficult to break through that, and when we do, it's a very quick, false breakout and reversal back to the downside. So, kind of looking at this from a higher level, 4,200 on the monthly chart, you can see that very clearly, where it was prior support and is now very strong resistance, right? So watch that again for resistance, and this month we'll have a good indicator of whether we can break through that or not. And again, earnings is largely going to drive that. So then let's go ahead and look at the NASDAQ 100 ETF. We'll take a look at the Qs here. All right, and I'll mention something here too that I didn't mention in the context of the S&P, but it's important to note. So we're ranging above a key support level around 315 on the Qs, the NASDAQ 100 ETF, and you can see here that we had strong prior resistance as well as support. And what I want to point out that a lot of people don't realize or incorporate into their analysis, when we're in a trend direction, in this case, we're in an uptrend, and we break a key level, and then we sustain price action above that level. So in this case, we broke through a key resistance level on the Qs, around 315. It's very common to come back down and retest that level, as we've done. And then, of course, one of two possibilities can ensue. We can quickly break off to the upside from that level as it relates to a resistance area, or we can range around it. And that's, of course, what's occurring at this point. But when you range around a level that you've broken through, whether it's a resistance level like this on the Qs or a support level, as long as you stay above that level, and you can see that price has mostly stayed above this prior resistance level, which now serves as support, it increases the likelihood of a continuation in the prior trend direction. So the prior trend direction was up, right? And we can actually see this here too. You can go back and look at this in past circumstances, but here was a strong uptrend. This was the support, right? A rotation back into support, and then a lot of ranging, and then a resumption of the uptrend. So that is what's occurring here, right? So when I mentioned as we started our session tonight, where is my general bias? Well, on a technical basis, ignoring any fundamentals and what happens with earnings, et cetera, it's bullish because we've broken very key resistance areas on the major indices like the NASDAQ 100 and the S&P, and we're ranging for extended periods of time. And again, likely that's because market participants are waiting for earnings results. But there's not enough fear in the market around the earnings results that are currently unknown to cause a sell-off. So what that means is people are staying in their long positions. So hedge funds, large institutions, money managers, people that control a lot of the market's capital that drives prices are cautiously waiting, but somewhat bullishly optimistic. Right? So that's kind of how to read this price action. The longer we range above key support and it holds, when we finally break the range, the more likely it's going to be in the direction of the prior price action, the prior trend. Okay, so it's not a certainty. So we always want that. That's again why we look at these levels so closely and use them in our decision making for our trades. In our market analysis, we want to keep an eye on this level and don't just assume it's going to hold, because if it does break and we start to trend lower from it, it also gives us a very high probability indicator of a stronger sell-off into major levels of support. Okay, we just want to know like which side are we on? Are we on, where does the probability lie? Does it lie with the bulls or with the bears? And we want to be on the higher probability side. We don't want to be against it. So right now that's bullishness as long as these levels hold. And we're going to take a look at the VIX, because the VIX is one thing that kind of throws a wrench in the wheel here. So the VIX has started to reach new lows that we haven't seen in quite some time. Right. So if we really zoom out here on the VIX, we haven't been down into current VIX levels since back at the beginning of last year. And typically when we get down into these like 14 to 16 levels, it does make the market more vulnerable for a correction or a sell-off. All right. So that's kind of the one thing that we need to also keep an eye on in the context of these key levels on the S&P and the NASDAQ, because if we see the VIX begin to spike and we see one of these support levels that we just mapped out on the S&P and the NASDAQ break to the downside, that's our warning to protect long positions, get out of long positions, initiate bearish positions, whatever we need to do to either protect or speculate on down moves in the market rate. So that's really important to keep an eye on. And we're down at these low levels. We can stay down here for plenty of time. So we don't just use the VIX level itself as our guiding light. We need to know what the VIX is doing in correlation with our key S&P and NASDAQ levels. So right now we're above key support on NASDAQ and S&P, and we're below resistance with low levels on the VIX. And if it stays that way, then technically speaking, we should have a bullish bias. If any of that changes in conjunction with one another, so if the S&P breaks support and the VIX spikes up, that's where we shift our bias, our sentiment. So right now we're 1683 on the close today on the VIX, but we're quite low VIX right now. So we're going to be prepared for a potential VIX spike. There's not currently a buy signal from our algorithm on the VIX. So that's what I really wait for to initiate hedging type trades in my accounts, or initiate bearish speculative trades in my account. I wait for these buy signals at low VIX. Okay, and low VIX I mean below 20. Okay, so if I get a buy signal below 20, and mainly when the VIX opens below 20, because it can spike above 20 intraday, of course. But if the buy signal comes in when the VIX opens below 20, that's where I get cautious. Okay. So then I really want to start paying attention to those key levels on the S&P. And that's what allows me to accurately time directional movement, even on a specific stock that's might not even be in the S&P and the NASDAQ, because this has such a broad market impact. If we just use the VIX, the S&P, and the NASDAQ, which is why we do this every Tuesday on our session. So you guys have a roadmap for what to expect, what levels to be watching, and how to react if those levels are either hold or if they're breached. All right, so that concludes our market overview and key levels. I'll go ahead and pause there and see, Craig, if there's any questions that have come through that we want to cover before we get into some of our scanning tonight. We're going to look for some opportunities, kind of go through the process that I'm using right now to look for opportunities.
Yeah, absolutely. So we did have a couple questions about the price action pivot indicator. People were excited and want to see that. So anybody who's curious about that, please email us at support@altostrading.com and I'll send you some more materials on that. Also, real quick, Jeff, somehow Zoom dropped me as host, so I can't address these questions in chat. Would you mind making me a co-host?
Yeah, let me see if I can.
I'll get to everybody's questions here shortly. It looks like no questions on the market overview. I think a lot of people are ready to start throwing symbols at you.
Yeah, I bet. Yeah, we'll do that as well here in just a sec, because I'm sure there's lots of stuff you guys want to look at, especially with earnings. Which, by the way, I was gonna, if you guys are cost users, Thinkorswim, if you go to the, let me go to the main page here. Well, this is the calendar tab. So at the top of your TOS platform, I don't want to, I'm dragging way too many windows over, and I'm working on multiple monitors here, so I'm trying to keep everything streamlined. But if you go to the main, if you guys use TOS, if you go to the main window when you open up the platform, there's a calendar and events tab at the top, and you can toggle over to that and select different significant market impacting events, announcements, Federal Reserve meetings, corporate earnings, dividend payouts, all these different things. But you can unselect all of those and just click on earnings, and it will give you a really nice handy list of all of the upcoming earnings for each day. So if you guys hold on any stocks or are considering trading a stock that might have a pending earnings release, it's a good way to be aware of it. And then you can also actually click on those, see the release time, what the analysts' estimates are, etc. So just wanted to point that out so you guys are aware. And let's get back over here. Craig, you should have host access now. Do you?
Yes, I'm all good. Thank you.
Cool. Anything on the market overview or key levels before we get into scans?
No, nothing on the market overview or support levels.
Okay. All right. So let's kind of go through my I mean, we've done a lot of kind of my daily homework. I always start doing what we've just covered, looking at my levels, looking at the VIX before I ever get into making a decision on an individual trade. So I also take a contrarian approach in most cases. So generally, when VIX starts to get low and risk in the market is perceived to be low, that's where I become more contrarian and look at it more as a higher risk market and more of a vulnerability for a market sell-off, at least if there's a catalyst. So what's happening now? We're in earnings season, and that is a catalyst for a market sell-off. So if a big component of one of the major indices like the S&P or the NASDAQ, like a Google or an Amazon or a Tesla, puts out bad earnings, and that's a pretty vague term because earnings reactions are often based on relativity to analyst estimates, but ultimately, without getting into the nuances of like how to interpret the actual earnings number, it's the market reaction that matters. So if the market starts to react negatively to a group of corporate earnings releases or a single company's quarterly earnings release, that's enough when the market is in a vulnerable state, which it is when risk is perceived to be low, to cause a sell-off. That's really all it takes. The market is, when it's in vulnerable territory, which again is when everybody else is being complacent and overly optimistic and the market's moving up, that is when it's most vulnerable. So it's somewhat in that territory, and it's somewhat, or not somewhat, it is in that context because of quarterly earnings season. So be aware of that. So even though risk is perceived to be low, the VIX is low, there's there's risk of a catalyst, albeit a single company's quarterly earnings or whatever strikes fear in somebody, to derail that. Outside of that, technically speaking, we do have broader market bullish sentiment, right? So we're seeing the markets move up. We're seeing it break key resistance levels. We're seeing those levels hold. When we met, I believe 2 weeks ago, we met, and our buy-sell ratio was like pegged at like 98%. I don't think I'd ever seen it that high. So it's come down into more of a reasonable range at 59%. So 59% of our buy-sell algorithms are, so it's more weighted towards buys, right? So when we look at the whole piece of the pie, 59% of those are buys. So this is, as long as that support level holds, reasonable enough for me to look at bullish opportunities. We actually don't have any underperforming sectors according to our algorithms. And so we've got financials, real estate, and materials, all is quite significant overperformers. Our ratings are based on a 1 and above as a top performer, to reach like a moderately performing. Anything from 0 to 1, I kind of ignore. It's mildly overperforming. 1 to 4, moderately. When we get above 4, we've got a very strong performing sector. So we have financials in that category currently. So financials are our top performing sector. So I'm looking at XLF, which is the financial sector ETF, right? And when I pull up a chart of XLF, I'm running through the same process we just did on the S&P, the NASDAQ, and the VIX. Right? So I'm looking at where might I encounter support and resistance on a technical basis. I can see that we had very strong support down in the 2950 to 3050 range. We've rotated off that. Next, because we did have a buy signal on the XLF today, we've got resistance right around 3325, quarter century. Let's see, extend this out further. Okay. These are signals that, so this buy signal came in right into a resistance, but I actually like it. So what I'm analyzing here is what was the magnitude of the move off of this level previously? Right, so I see significant price moves off this 3325 level, but it also creates some uncertainty and risk. If, for instance, a financial sector company reports negative earnings, that resistance level could hold. On the other end of the spectrum, we are beginning to exit the fear of a collapse of our banking system after, what happened with Silicon Valley Bank and others. So it's a little bit of a tug of a war, and we're at a resistance level. So what do I want to see happen here if I were going to take a trade off of this? So it's a buy signal. Okay, we'll look at the entry price. Let's yeah, we'll look at that here in just a second. So it has the potential for a false breakout and for this to continue to hold as resistance. So here's the other thing I look at. Generally, like over the past year, so going back here to April, March, April here, did this level serve as support or resistance most of the time? Like which one was more prominent, a support or resistance over the past year? So if we look at May of last year, it was support. It broke in June. Some resistance here. Broke. Support. Broke. Support. Held as support. Now we're at resistance. So generally, when we're able to get above this level, even when it served as support and then it ultimately broke, there were still significant moves of, to the magnitude of like $2 or $3, which on a $33 stock is a very large percentage move off this level. So that's what I'm looking at. What were the magnitude of the moves from this level? Were they from a perspective of support or resistance? In this case, there was more support at this level than necessarily than resistance. The resistance broke pretty easily. There wasn't a lot of hesitation. And when it did break and came back down, it at least held for a while or made a pretty strong move, to the magnitude of like 6, 7, 8% off of that level. So a lot of money can be made with a 6, 7, 8, 9, 10% move in a stock, right? Or an ETF or anything. So being that this is at a key level, if we can break this, because this is resistance currently, it has a lot of potential, but we just need to be careful of false breakout. So what I do is if I get a buy signal like this into a key level, and I've done this analysis on my support and resistance, I always look like, what do I have working against me? Well, I've got a bit of bearish divergence. We're in a red cloud here. I've got the resistance level. What do I have working for me? We've rotated off a support level, which I didn't mention. Like what do I look for when we make a move off of a prior technical level, technical support level? So it's that 30, 50 to 29.50 zone, right? Well, over the past year, we've made really big moves off that level. And each of those moves resulted in a breakout of this 33.25 resistance zone, right? Now, always remember, this is not, it doesn't guarantee it's going to replicate this in the future, right? But what it does do is it tells us that all of the market participants that are causing these price moves are obviously watching these levels. They're for any number of reasons, fundamental and technical, finding these levels as either attractive buying or selling points. So we don't necessarily need to know, and we can't know. Nobody can know. Nobody can know what everyone's thinking in the marketplace, right? And this is where technical analysis really becomes handy. If we know where these supply and demand points are, we don't have to know what every individual is thinking. We just need to know how the broader market, the collective, is reacting. So while it's not a crystal ball, it's the high probability method for being on the right side of the directional movement, and also preparing ourselves for reversals off of significant levels. So that level again on the XLF is 33.25, right up against that. We had a strong bullish close today, with a move up of a little over 1%. So let's go look at the entry. And again, we're just looking at the ETF. We'll dig into some potential symbols that might be more appropriate within the XLF, because then this is one of the key things I do. We're looking for opportunities that are going with the flow of the broader market direction. Right now, we're just looking at broad market direction. It's like looking at the S&P or the NASDAQ. This is the XLF, the financial select sector ETF. So it encompasses a lot of individual securities. We might be able to find the diamond in the rough within the XLF. So that's what we're going to do next. But and then we're going to open it up for ticker roundtable. So I'll just spend another minute or two here on this. But our pending entry is 33.31. So that's algorithmic. It doesn't in any way account for support, resistance, etc. So once I have that 33.31 number, I really want to then look at what are my highs and lows at these key pivot points. 33.21 low, 33.19 low, 33.08 low. So again, all very close to 33, 33.14 high. Okay. So I just want to make sure that that algorithmic entry price is not right at one of these highs and lows where we might see one of these key reversals again, because there's historically been a lot of them at around that price, 33.31. So I might, give myself a few extra ticks, or I might wait for after tomorrow, because and here's why. And this is what I often do. And it takes a lot of patience, and you will miss good opportunities by doing this, but it's better to miss good opportunities than get into a bad one, right? Because there's always going to be another good opportunity that comes along. So since we're right at this resistance, the patient thing to do is wait to see what XLF traders tomorrow do. Because if there's going to be a false breakout, it's likely going to happen tomorrow. So if you're more aggressive and you can accept that risk, then, more power to you. If you want the higher probability, outcome, then wait to see what happens tomorrow. You might miss it. I mean, XLF could explode, and then it may continue to run up, and then it's probably not a good idea to get in at that point. Or you could, reduce the risk of getting whipsawed or caught in a trap when there's a false breakout. False breakouts also create opportunities. So if this ends up in a false breakout and this 33.25 level holds, it's a short opportunity, right? So that's kind of the two ways to play this. And then, so oftentimes when if I'm going to place a stock trade or an option trade, or, if it's an optionable security, I look for the ETF. So I start with the index, then I look at the ETF. So this is really kind of my whole process. And then in the Zillion platform here, I've selected XLF. So it's pulled up all the components of the XLF in my scanner. So then I can actually start looking for pending buys, that correspond with a bullish cloud. So now we're getting more, digging in deeper, getting more granular with these opportunities. I don't know even what Lindy is, but there's one. It's at the top of them. Don't like it so much. Let's look at GE. Same thing, breakout trade. And let's look at Edward. This one's already open. Or sorry, it's already on day 3, but not triggered. Yeah, it has conflicting signals, but nothing's triggered yet here. So you can see this corresponds to what we just saw in the XLF. So see how I look at these 3 components of the XLF, individual stocks? They're all up at resistance areas. See that? Somewhat to be expected, but what I am noticing that diverges from what we just saw in the XLF GE is in a green within bullish divergence, right? I don't so much like a buy signal at the top of a big move. I like these pullback buy signals that we had down here. So not an ideal signal for me, but something to put on my watch list, right? If XLF continues to be a top performing sector, I want to know where my support levels are for buying opportunities. So there's a big buying opportunity down at 90 bucks on GE. If we get back down there and it holds and we get a buy signal, that's when I would jump all over. Right. So currently like the XLF actually looks like, when I'm just looking at pending buy sells, right, in this case, of course, buys. Let's see if there's any entries that are recent. Maybe a couple down there, but the XLF actually, if I were going to play the XLF or the financial sector, the XLF would be the one that would make the most sense for me. But these are also opportunities. So like, again, going back to the pending, GE, maybe Edwards, Life Sciences, if we remain in bullish divergence, would be opportunities for me if we get a pullback. But right now they're at high prices. So I want to see the pullback in the support with a buy. And you can see that, historically on these charts, when we get, or it works the opposite way. Like if we get a down move and then a pullback into resistance with a sell, you can see that when you look at these signals historically in that context, right? So when you get the pullback in the direction of the broader trend and a corresponding buy or sell signal, they're the cream of the crop signals, right? They're the ones we really want. Or this is kind of what we talked about on the S&P. So we had, this is actually, it looks very similar to what we just saw in the S&P, this consolidation, right? So when you get consolidation after breaking a resistance that then transitions to support, and this is kind of what I'm thinking is most likely to happen on the S&P if that support level that we just looked at holds. All right. So so that's kind of the sector I'm looking at right now is financials. And of course, I'm watching it in the context of earnings. Also kind of keeping an eye on real estate, but I'm not real, optimistic about trading real estate with rising interest rates and stuff. So if I placed any real estate trades, it would be on very short-term basis and maybe even wait for those to become underperformers and look for bearish opportunities. I think financials, have some degree of at least short to medium term resilience after the relief of, overcoming this fear of a banking system collapse and things. Again, pending quarterly earnings, et cetera. But those are kind of some of the things I'm looking at and how I'm looking at them. So Craig, any questions there? Let's go ahead and kick it off and open up to ticker roundtable, see if anyone has any individual tickers you guys want to share. You can put those in the chat box or the Q&A box.
No questions on that so far. Give people a second to see if they have any they want to type in real quick. Let's see. Now just seeing some symbols come through.
Yeah, and guys, we'll take a look at the symbols. And if you guys have any like specific questions on those symbols, like, hey, I'm thinking of, we can't give you obviously individual advice, but like, hey, I'm bullish on, Amazon. What support levels are you watching? Certainly put in the ticker, but if you have any specifics that we can hone in on, that always helps too.
All right, we got some coming through. Schwab.
All right, let's take a look at Schwab.
SCHW.
Still waiting for my TD Ameritrade account to show Schwab. They bought out TD Ameritrade. I mean, some of it does, but I guess it's kind of a process. They haven't merged completely, I guess, but now let's take a look here. So I'm really, zoomed out here like a couple of years, but there's a key support zone here on Schwab. So right around 48 to 50. And we do have an open buy signal on Schwab. We'll hone in on that in just a second. So this is this roughly 48 to 50. I mean, low from this crazy spike. I mean, one intraday spike was down like around 45, and there was, some resistance probably right around that level. But I'm looking at rotations off, and of course, resistance here. You got sell signals all over the place. I like this buy signal. There's one thing to keep an eye out here that I'll mention, and that's volatility. I mean, this stock has been incredibly volatile. Obviously, it just got hammered over like 3 days back in March, but that seems to have died down. You can see that, there was some volatility spillover here in the ensuing days, but it's starting to kind of subside. But even in the midst of this extreme volatility, and sell-off, it found support at that 48 to 50 zone I just mapped. So I think from this level, it has some good potential for a rebound. It just might take a while. If I were to, trade this, I would expect it to maybe take a while, and there might be some choppiness on the way. 60 is a key resistance level I would be watching. Right, you can see here it was prior support. Even here in the sell-off, where there was some relief buying here, still resulted in selling right around 60 and another leg lower, which formed kind of somewhat of a double bottom here. But current closing price at 54, you got 6 points to move to play on the short to medium term up to 60 as a resistance level. And there's some kind of more minor ones that might be less obvious to spot, like around 55 to watch in the meantime. But yeah, this isn't, oh, it looks like it was taken out. See the volatility right there. So when I take signals like this was a buy signal. I had a trailing stop here, entry here. So luckily, when there is a lot of volatility, the algorithm contains this pretty well relative, especially to the successful positions. But this is one I would usually play with like an options trade. So I don't need to use actual technical stop loss levels on the individual security. I can just define my risk with an option, position and let it run and give myself plenty of expiration time. So good takeaway here. When I see crazy volatility like this, but also a potential good buying opportunity off a very strong support level, or conversely, a selling opportunity off a resistance level, and Schwab is an optionable, stock. I prefer to play these with options, because then it removes the need to use a specific technical stop loss level that could be wiped out by volatility. It allows you to select your expiration and time frame. You can go out, 2 or 3 months on like a debit spread, bullish bull call debit spread on this. Give it plenty of time to work out, define your risk, and don't get stopped out, because when I see volatility like this and I get a signal, I do not want to trade the security individually, because unless you're willing to, buy and hold medium to long term, if you're doing a short-term trade and using stop loss levels, you have a high risk of stop out. Which, by the way, we cover that in many past weekly sessions. You can actually determine, because our initial stop was down here, the algorithm thankfully trailed it up 2 points in the midst of this choppy price action. You can see exactly what your statistical probability of getting stopped out of the trade is in the options chain. So we've covered that. in our past weekly sessions. You guys can review those too. But I look at all of that, so yeah, I think this one has good medium to long-term potential to the upside. It's just that there's obviously some volatility to encounter. All right, let's take another.
All right, Boeing, BA.
All right. So don't currently have any open signals on Boeing. Let me just get a little bit of a wider perspective here. Yeah, interestingly, so also guys, one thing I look at that I would encourage you to take a look at as you're doing your analysis when you place trades, and usually I like to go back, at the very least a year, but maybe 2 or 3 even. Here we're going back into 2021. When you're in a certain price range or at a certain price level, it also helps to look like how does the stock tend to react at that price level or in that range. Because yeah, I mean, history never repeats itself exactly, but it repeats itself pretty well. Look at this. Boeing ranged from like 200 to 230, May, June, July, August, September, October, November, 2022 before bear market hammered it. Now we're back up, right, in this price range. What's the stock doing? It's not getting back up to 30, but it's ranging again. It's just 200 to 220. So instead of ranging at 230, it's ranging at 220. Now, there's really only one reason that can happen. There's nothing magical about these numbers. It's a technical analysis. It's kind of like a self-fulfilling prophecy. Market participants, people who are trading Boeing, that are trading, putting enough money into the stock to drive price, more than like a couple ticks with intraday, they're driving it, over the course of days or weeks. Know that this range was in place. There was supply and demand here at these price levels. We're back up there. People think, well, supply and demand must still be right around these levels, right? So that's what's happening here. So it helps tremendously to look at current price levels, ranges, support and resistance to determine, again, not a certainty, but a high likelihood of those occurring in the present time. So that's kind of what's happening here. We're getting a lot of ranging. So again, in the absence of no real buyer sell signals, there's strong support at 200, strong resistance 220. If we break 220, we're going to have strong resistance at 230. If we break 200, not on an intraday or a 1 day or even like again, I'm looking at past price action, a move down in a 190. But if we see a strong move below this level or this support zone, and we get a retest, look for that to serve as resistance and a resumption of a down move. If 200 holds, we continue to get positive price action to the upside like we are now. All probabilities point to ranging price action up to 220. So this again, no current signals. We're seeing, like, if you zoom out here, sells and buys near the bottom of the range. Somewhat of a tight range, 200 to 20. So we're looking at 20 points. It's 10%, but playable either in a ranging type of strategy, of which there are many, or a breakout strategy, just with the caution that wait for the breakout to actually resume directional breakout and retest. But yeah, a lot of choppiness here. These are tough ones to trade, unless you're very experienced and accustomed to trading ranging price action or channels. All right, let's take another.
All right, In Phase Energy, ENPH.
One I am not familiar with.
ENPH.
Oh, EN. Not familiar with this one. Energy stock, obviously. Looks like it has an open buy signal. So yeah, I'm not familiar with the name, but on a technical basis, we've had a move off to the upside off support and some buy signals here. This buy signal is open. It looks like entry. We'll take a look at the actual entry price here in just a second. That looks like probably somewhere around 213. And we're up on a close at 227, but we did hit resistance. So see how today, I mean, it's kind of small here. Let me zoom in. So once you're in an open position, this is also something to look for if you're encountering a support or resistance level. So we had a close, significantly off the high. So it's still a bullish close from open to close, from low to high range. But see how this resistance area here looks like it's right around 230. All right, so if I had taken a trade off the signal, this would be a scaling out level for me. So I would have already had this 230 level mapped, and I would have, most likely taken profits on like half my position at 230 and move my stop to break even from the entry. Because now we're at, it's a successful signal. Again, we'll take a look at the entry, but it's well in a profit. Certainly, taking all of your profit is never a bad thing. But there's a higher probability for a pullback lower because of this resistance level. If this resistance breaks, then yeah, there's potential for a higher move because there isn't a whole lot of just hit a button on my thing here. A whole lot of resistance in close proximity. Let me see. The entry was 212.54. Yeah. So this thing's 15 points in profit, 15 points plus in profit. So and it's at a resistance level. So good profit taking opportunity, or at least scaling out, making sure that you're protecting the position as it encounters significant resistance. All right, let's take another one.
Morgan Stanley.
All right. Why did that not come up from the ticker? Oh, it's probably because I have a filter on here. Let's see. That's bizarre.
You can just put in MS and press enter.
Wonder why it didn't come up though. Must have been a filter I had on. All right. Let's see. Morgan Stanley, we got an open buy on this one too. Looking good. So I like these buys off this support zone. So it's this one from back in December was a really good one. And then we got this one on April 14th off of this support level, which let me just draw that for you. 84. Let's see if I see anything else here. Yes, we're above 86 now, which is good. So I'm looking at 84 and 86 because we've got significant supply demand rotations off of these price levels. So now, the open signal entry was probably somewhere around 87. We'll look at the price on that too, but right around 90 to 92, I'd be really watching for resistance. I see similar price action as the last ticker we looked at intraday here. So there's a little bit of bearishness at this. Looks like roughly Yeah, it's kind of, yeah, 90. What was the high? Let's see, 90. Yeah, high was 90.54. So kind of like the last one we looked at, be careful here because could see rotation lower, rejection of that resistance area. See if I see anything else here. Yeah, I would watch 90 to 92 resistance. Could be, more of a short-term, resistance pullback, but we need to see this move above. I mean, technically, probably more like 93, 94 would be the resistance we need to get through here to retest like the 100 level. But that's very near term. I think, more medium term, yeah, it's got some potential. Of course, always consider that these are currently resistance levels, and if price rotates lower from them and they hold, they will remain that way. So treat them as they are based on current, price action, not based on your initial analysis. So, but yeah, great buy signal there. What was let's see, the entry price was 87.57. Yeah, so this is over 2 points in profit. It's a good signal.
All right, Meritage Homes, MTH.
Don't know anything about Meritage Homes. It's an interesting selection. Whoever selected that. I'm assuming it's like a home builder or in the home building space or mortgage space, but
Yeah, I googled it. It's a home construction company.
oh, you're fast. Already Googled it. Home construction. All right. Which to me, like sector-wise, is kind of a risky sector right now, but the stock obviously is done extremely well for one reason or another. Let's see. No current buyer sell signals. It does have bullish divergence. It did break through resistance. So generally when we see like, especially after, this stock ran up from like more than doubled. So it was down around like 60 mid late last year, more than doubled. It is to some degree, again, ignoring all fundamentals and etc., higher risk of a pullback. So you really want to be watching your key support levels. But we did just today, broke through this strong resistance where there was, bearish price action and sell-offs to the extreme, right? So last time the stock was up around this 120 plus level, it was driven into the ground down to 60. So again, past isn't indicative of future, but there's a risk there at this price level that I'd be careful of. So these are the key levels I'd be watching, kind of right around 115, 123. And I'm always very cautious, whether it's taking a directional trade in the actual security, buying or selling shares of the security, or trading derivatives on it, even of anything that's at an extreme high or low. So like I look at 52, even 104 week highs and lows. If you're at one of those, in this case, you're well above a 52 week high, there's a contrarian risk, right? And even if it's not a result of company fundamentals or even broader like industry or sector impact, think of all the people that bought this stock down at lower prices that may have doubled their money. Eventually, they're probably going to take profits, right? And a lot of times, when you get enough capital into a security, so look at the volume, et cetera, where there's profit taking, it's enough to, drive the shares lower. So make sure you don't get trapped in that. So those are some of the considerations and risks of buying at tops like this. So generally the prudent thing to do is wait, see if support levels hold. But yeah, I mean, obviously the real buying opportunities in Meritage Homes were back here on these, this bottoming into 60 and the double bottom particularly created some really nice buying opportunities. At a top like this, yeah, I mean, a lot of the moves taking place. Once somebody's doubled their money, don't try to get in and double your money. It's kind of the rule of thumb. All right, let's take another one. Kind of neglected ticker roundtable for a while, so I want to make sure.
Yeah. Chesapeake Energy, CHK.
Okay, really nice buy signal here. Still open. But this is a great example of buy signal off of support. Right, so this one has been open for a while here. Buy signal came in March 20th, triggered the next trading day on the 21st. You can see our trailing stop levels. Current trailing stop resides around 80.50. Let's actually take a look at entry price was 75.07. So it's 6 points in profit. I mean, this is, let's look at resistance and see where we might encounter pullback. So 82.50. Yeah. And it's today this is actually where our price action pivot indicator becomes very useful. Let me zoom in here. We don't quite have a completed bearish price action pivot, but what did change today is we put in a lower high and a lower low. So we previously had a series of higher highs, higher lows. And today we posted a lower high, lower low. So this is something it's not the full picture, but something we programmed into our price action pivot indicator. So this is setting up to be a potential bearish pivot off of a resistance level. So I think very likely this will get stopped out tomorrow. Still a great buy signal, but strong resistance to contend with, and a shift in price action sentiment from bullish to bearish. And this is actually why we designed the price action pivot indicator to help us spot these types of things. But that's, again, not confirmed, but kind of starting to set up. So might be, if for any long positions, could be a great profit taking opportunity, or at the very least, making sure you've got your stops tightened up in case it does continue to run up and break through resistance. All right, you got another one, Craig? Looks like a lot are coming through.
Starbucks, SBUX.
All right, so we actually got conflicting signals. Anytime we get conflicting signals, to see here was a, and this was a trigger one actually, but here was a buy, here's a sell. We give the greatest weight to the current signal. This buy I did not like. I didn't see it. I didn't happen to spot it, but looking at it, I wouldn't have, it wouldn't be one I would take. I wouldn't like it because of the resistance here again. So as I mentioned on some of the previous charts we looked at, this is an exact, base case for where I would wait for, exhibit patience, wait for the breakout, wait for the retest. It's going to keep you out of a false breakout, because what happened here is we had this strong resistance area. Buyers pushed price up just, if you look back here, look at that, right there to that resistance. And then sellers came in and proved all the buyers wrong. So that's what you can avoid if you wait for the confirmation, which we didn't get. But now we did get a sell signal. So to me, this buy signal wasn't good to begin with. It's at the top of a move into resistance, and I would need the confirmation of the resistance breakout and retest to take this buy signal. Possible it still comes in, but not looking like it. So as of now, like for me, this is a sell opportunity on Starbucks. Let's see where our algorithmic entry price is. 108.80, or sorry, 107.57. 107.57. So just right here below today's low. So if we came down into that 107.57, I used a contingent order or a sell stop, depending on how I traded this, that would be to me the better opportunity, probably for a very short duration trade, bearish trade, because there is a strong support around 105.50. So I might not get a big move. I would have to really keep an eye on that 105.50 level, where you can see that there was prior support and resistance. So I'd really be watching if we do get that move off this resistance. That's likely where it's going to move to before it encounters any kind of stalling price action or reversal, or potentially, if I'm in a short position, it's a scale out level where I could exit half the position, move my stop to break even, wait to see if that support level then breaks for a greater profit opportunity. But yeah, this is why, again, good base case for why I try to avoid these buy signals into support, or sell signals into, or in the resistance, sorry, or sell signals into support. All right, let's take one more.
All right. This be interesting. First Republic Bank, FRC.
Another bank at stock. Ooh, ouch. Well, great sell signal here. This one sell signal, probably right around 142, down in a 16. Beautiful. So again, guys, if you guys are Zillion users, this is really what I look for. Confluence, or the alignment of a sell signal with the transition from a bullish to a bearish divergence cloud, a green to a red, or vice versa, a buy signal from a red to a green, or within. So a sell signal within a red cloud, buy signal within a green cloud. Those are my bread and butter, and so that's what I look for. I would never take a short position on this after sideways price action. I'd have to zoom out a little bit further here to see if we have any support. Yeah, I mean, going years back, I'm not seeing anything, but one I would, probably not going to trade. What I would, if I were, I would wait for, I mean, this is such a terrible move. I wouldn't even ever trade this stock, but, and I'm not sure if it's optionable, but if anything, I would take a contrarian approach, wait for bullish divergence, a green cloud, a buy signal, and a retracement of this extreme move, which I haven't seen one of this magnitude in a long time. This is crazy. Like, the stock was up at 220 bucks a share and it's down at 12. It's probably never coming back. If it can get, annihilated that badly. But in any case, yeah, there's really no opportunities here that I see at the moment. Although there is an open sell signal, it's not after any significant move. It's after sideways price action. We want to take sell signals that have that follow significant moves up into resistance, or buy signals that follow significant moves down into support. And so that's, doesn't meet the case. It does tell us that if we were to be on one side or the other, the bearish side's the one to be on, right? Momentum is bearish. Divergence is bearish. Obviously, price action movement is bearish. That's all I would interpret this as, not any like real opportunity. But good one to look at nonetheless. That's crazy. I'm gonna have to watch this one more. I guess if it ever gets back up, it might be a good short opportunity. But Pretty crazy. So, all right, guys. Well, thanks for sharing all those. We'll continue to look at more. If we didn't get to yours tonight, we'll do our best to get to those next week on our session. Any final questions before we wrap up tonight, Craig?
No, just got a few people who probably gonna, please come back with your symbols next week. I know we didn't get to a few of you, but no, other than that, all good.
Yeah, please come back next week, guys. We're gonna get into more strategy next week. So we'll open up a new strategy for next week, and then again do more ticker roundtable.
Oh, wait, sorry, Jeff. We'll be
yeah.
having a session next week. We'll be at the Money Show.
Oh, sorry, I meant week after next. Yeah, so we're going to be at Traders Expo Money Show next week. So we'll be back 2 weeks from today. Sorry about that. Thanks for reminding me. And again, if you guys are going to be down at the Money Show, please stop by our booth. We're booth 503. Love to see you guys face to face and get to meet you all. If not, we'll see you next Tuesday. If you have any questions in the meantime, our email is support@altustrading.com. Please take advantage of the 25% off special. We'll at least run that through tomorrow. So take a look at the new site. Let us know if we can answer any questions, and wish you guys a great rest of the trading week, and see you in 2 weeks. Take care.